welcome back. There's 2 minutes to go for the pre-open session. Anuj is here with how he's seeing things. Anuj, should we start with football? Customary, not to the greatest ever final, perhaps.
The greatest ever final, and excuse me for my voice because you can imagine.
Shouting.
Yeah, obviously, and 700. I was part of 700 people. We had a mini stadium within our society, obviously. So just a completely different sort of environment. And of course, Messi will get the limelight, but for me, the hero was Martinez for one more match. I mean, the way he saved the goal in the last minute and then in the penalty shootout, of course. But a great final, worthy of a final, except for the first 40 minutes when it looked like it was just one-sided. Yeah. And after that, those changes from France and then in the second half, Mbappe. And while Messi might be the GOAT, he might have it only for 10 years, given how Mbappe is performing. In next 10 years, perhaps it could be all about Kylian Mbappe. But really a great match. But anyway, let's talk about the market. Though. But what are you? I think almost everyone was cheering for Argentina. I mean, I was the only one who was cheering for France. I mean, among the 10% few people who
actually on the editors roundtable when we did that poll, right?
France.
Everybody said head says France.
Heart
I was the only one who said Argentina for both, and I told you, boys, start betting with your heart as well.
My son had he made this. He got a stick and he got a ruler and he made a full big Argentinian flag. So it was very clear in the house, who the house was supporting in that sense, right? And you know what, I'm glad. I mean,
yes, and you know what? I got so many messages from Kolkata that you should have been in Kolkata last night because they had bigger firecrackers than Diwali. I mean, so you can imagine.
Kolkata is big.
Kolkata, it's huge. Kolkata and Kerala, of course. Yeah. But anyway, enough of football. Now let's talk about the market. Like we discussed on Friday as well, the Nifty has broken the 20-day moving average, and it's a sign that the market may have started a correction. There were two rallies on Friday, both were brutally sold into, and the global picture also has become a bit murky. So the texture now clearly is sell on rally. And we see the 18,300 to 18,500 calls. We have seen a build-up of 1.1 crore shares in open interest there. So 18,300 to 18,350 will be the first resistance zone. I think we open somewhere around there, going by the SGX Nifty. My sense is you will see selling there. The first support for Nifty emerges at 50-day exponential moving average of 18,200 and then 50-day simple moving average at 18,080. This could be the zone in which you might see some short covering, some profit booking by shorts. Below 18,000, of course, the Nifty breaks down and perhaps even tests the 200-day moving average, but we take each day as it comes. That's not the immediate term sort of call. Now, in terms of Bank Nifty, it's sort of protected its 20-day exponential moving average, 43,157. So it's a bit of a no-trade zone, 43,150 to 43,500. And my sense is traders will take trades only if the Bank Nifty breaches the range, either on the downside, 43,150, or on the upside, 43,500.
Okay, all right, Anuj, thanks a lot for that. Well, Manoj Muralidharan, VP Derivatives at Religare Broking, joins us now to give us his calls for the day. Hi, Manoj, morning. Tell us, what do you have for us?
Good morning, Nigel. Nigel, I guess this is almost seasonal. This last 15 days of the year, if you see the positions in the index has actually come down to almost 1 crore. So almost 1/5 of the position that we started the December series is gone away, and the selling in the market is more because of lack of buying, if I might say that. So we believe that Nifty still remains in sell on rise with 18,400 on the upside, and there is a possibility of 18,100. So at least the trade on the index is to sell on rise using Nifty put options, or maybe if you get some close to 18,360, 380, or that is a good level on the spot to go short, and the stop loss can be 18,450, the target can be 18,100. Now, stock specific, we believe that the frontliners might also chip in. For IT. Obviously, it tried to stage a good rally the first 7 days of the new contract, but then we believe that later on there was profit booking and there is short position going on. So TCS, I believe 32.48 to 32.50 on the futures, that's a good level to go short. The stop loss should be 33.10, and we expect at least 31.50 on that. From the banking, we believe Axis can still see some more profit booking, at least a good 12 to 14 odd points. So 928 to 932 becomes a good level to short, and the stop loss can be 945 with the target close to 918 to 920 at the stop.
All right, Manoj, thank you very much. Good getting that from you, and more later. Now, on Market Laser today, I'm going to highlight one name from the insurance space. This is ICICI Pru Life Insurance, which seemingly has now come to an interesting kind of level from where it has bounced in the past as well. So this is ICICI Prudential Life Insurance I'm talking about. The chart will come up, which basically tells you, I think, pictorially what I'm describing. So, what we've basically done is it's a daily chart for ICICI Pru Life. The levels where that horizontal line comes in is at about 440, 442 or so, 445, around where basically it closed on Friday. The first touch point is March of 2021. The second touch point, right in the middle of the screen, and you can see a slight breach and then a big rebound, is March of 2022, exactly a year later. And now, as we wrap up 2022, we are back at that level once again. Actually, on Friday, the prices broke through this level on the downside. But, as you can see in March of 21, March of 22, prices did go below this by a little bit, but then eventually saw rebounds, decent sized rebounds. I mean, actually, post the 21, the rebound was much bigger. Post the 22 touch and break, I mean, the rebound was big, but not as big. So we'll see what happens from here on. Just a couple of points. And I also wanted to present this because insurance, life insurance especially, has been such a huge underperformer, right? As a sector, not just ICICI Pru, but others as well. So if you look at ICICI Pru, it's down 21% in 2022. It's basically below the 2019 closing levels. So, I mean, you got to go, 3 years to find these levels, more than that. The challenges are twofold. Actually, there are more than a few, but the big challenges are that the industry, the life insurance industry as such, is not adding, the addition of new policies. Policy addition is not all that great. And this has been true for the last several quarters. Of course, I mean, during COVID, there were huge losses, etc. So reinsurers have had to increase rates, so expect no kind of leeway from reinsurers. I can go on. There are a litany of reasons why there has been underperformance. And ICICI Pru's specific one challenge is that its growth is more volatile compared to its peers because of a higher share of ULIP policies that ICICI Pru has exposure to. Just wanted to put the challenges up there as well. But that's the reason why the stock is kind of languishing at these 450, 455 kind of levels. But I would say, looking at historical data, it's an interesting zone. So you might want to keep this on your radar. Nigel, what are you watching on Momentum?
Well, on Momentumizers today, I'm tracking Balrampur Chini. Remember, on Friday, everyone's talking about a weak trading session, but Balrampur Chini was one of those few stocks that ended with a gain of around 2.5% on. And in the past 1 month as well, the stock has seen quite a good bounce back, because it's up close on 12, 13% or thereabouts, while the mid-cap index, that is underperformed in comparison to what Balrampur Chini, or the other way around. Balrampur Chini has outperformed what the mid-cap index has done. That's the perfect chart out there. At the end of the day, I was looking at the NSE data, and the traded volumes were much higher than what we saw in the previous 10 trading sessions. So much higher traded volumes out there. Even delivery volumes, they were more than 3 times what we normally see. So high traded volumes backed by delivery, and the stock moved up as well. In the F&O market, the open interest build-up was more than 10%, but the stock has moved into the F&O band. Just going by the screen, it appears the stock is good for more. But the important levels on the downside are the 20 DMA and the 50 DMA. Let's see how this one does. But when stock ends in the green on a day when the markets are falling apart, that's giving you a sense about how is it moving.
All right, Nigel, thanks very much for that. So we'll keep an eye. Sugar did very well on Friday, Balrampur specifically, Nigel highlights. Now, in a boost for oil players, the government on Friday slashed windfall taxes on oil produced, as well as refined products like diesel and aviation turbine fuel, ATF. Well, stocks reacted, but then, as the market was weighed down, they gave up bulk of these gains. But this is important. Prabal Sen is energy analyst at ICICI Securities. He's joining us now to take some questions. Prabal, great to have you with us here. Thank you very much. For a producer like ONGC, given what the government has done, can we say that the government is okay with the company realizing between, say, 70 and 80 or 75 and $80 a barrel? So we know what the comfort for the government is, beyond which maybe more will be taken away in terms of these taxes, etc. Your thoughts?
Yes, I think that's something that the oil minister when the windfall tax regime actually started, he had also very clearly mentioned about an acceptable level, of basically about $75 to $80, where I think at that point of time, crude had gone up to about 120. And he had mentioned that if crude collapses by another $40, then this tax would be removed. And I think very clearly the government has kept its focus on that particular level, and the taxes have been continuously getting revised to sort of ensure that $75 to $80 is what ONGC and Oil India continue to make. So, to that extent, I think that is a very clear floor that the government is comfortable with. And from companies' perspective, I would say this realization is still almost a decade high if you really track their effective realizations for a very long period of time. So I think it actually works out for both the players, this kind of a price level.
ONGC Prabal is pricing in what, $40-$50?
Yes, I think at 150 rupees or 140 to 150 rupees a share, they have never really priced anything beyond $55 over a longer term.
So I mean, if oil prices stay here, there should be money to be made here in ONGC?
No, absolutely. And I think one of the things that we have continuously highlighted is precisely what I just said, that even if you assume windfall taxes continue to be there and their realizations are capped at around $75, and gas prices also sort of reduce for the near term, given the Kirit Parikh committee recommendations to somewhere around $7 going to $8, these numbers are still 7-8 year highs as far as the company is concerned. And now that they've spoken about the FPSO actually coming through and having entered Indian waters, from what we understand, the basic last remaining piece which they need to bring in and then connect to start their KG Basin asset. I would say the biggest worry that has been there for the last 5-6 years, which is production growth, can also start to see a little bit of improvement. So to that extent, we would definitely look at material upsides from these levels for ONGC.
Okay, all right. So that's about ONGC, Prabal. But what about the other stocks? What are the top buys you have?
Continue to like specific names in the gas space, particularly given the reforms that have been announced both for transmission tariffs as well as the imminent gas price revision, which we are kind of hoping that the committee recommendations are accepted in full. We would say that on the CGD space, we continue to like IGL and MGL both. I think the transmission plays, GSPL, I think looks pretty good at these levels. ONGC and Oil India, I already said, we continue to like, and in the OMCs also, given the improvement that is happening on the marketing losses, given the softer crude and product prices, and the fact that GRMs continue to hold up at fairly healthy levels, we like all three names at this point of time.
Prabal, thank you very much for joining in. The pre-opening rates are very quiet, just up 20 points on the Nifty. IT is on the back foot. In the pre-opening rates, Infi, TCS, Wipro, all of them are down close to about 0.5 to 1% on the gaining side. Some green seen on ICICI Bank, Reliance, ITC. These three heavyweights are pushing for the bulls. But as of now, there are no big moves on either side for the large cap names. Let's get in a few 9-10 calls. Sudarshan and Mitesh are back with us. Sudarshan, what do you have for us?
Buy the Nifty if support at 18,300 holds. That's going to take some time. Chambal Fertilizers is a buy with a stop under 307.
All right, Mitesh, what about you?
I'll go with a buy on Balrampur Chini with a stop at 387, targets of 405.
Okay, all right, Balrampur Chini. Then thanks so much, gentlemen, for stopping by and giving us your picks at around 9-10. But let's focus on the IT pack. Rima, just revise that for us.
Well, we're watching for IT names because Accenture reported their Q1 FY23 numbers on Friday. Post the numbers, Accenture share price was down 6% over the last two trading sessions, Thursday and Friday. It slipped close to about 10%. So there is a negative bias to Indian IT this morning. Q1 numbers by Accenture were strong. FY23 guidance has been maintained. So the bears are saying that despite a strong Q1, the company has not upped its full year guidance, which means it is pricing in a significant deceleration in the remaining quarters, particularly in the second half of the year. The management commentary is also turned a bit cautious. They are seeing caution among the clients with a clear focus on cost optimization projects. They're seeing a slowdown in smaller deals. Morgan Stanley says that they see limited triggers for a re-rating of Indian IT companies in the near term. Citi says management comments on IT budgets remain a key point to focus on in the Q3 earnings call. in the IT space, they only like Infosys. That's the only buy call that they have. Remember, IT has been on the back foot. It's down 5.5% in the month of December. And for the year so far, it's lost close to about 26%. So this morning, IT could be under pressure because Accenture's commentary does indicate some amount of caution. And as I said, the stock price saw a big tumble.
Oh, absolutely. Well, L&T is the other one we want to focus on. Vivek is here to revisit that. Vivek, hi.
Good morning. Yes, L&T will be in focus. Now, the company, in line with its stated strategy to exit non-core holdings, yesterday indicated that it has entered into an agreement to sell its entire 51% stake in L&T Infrastructure Development Project Limited to Edelweiss Alternatives. Now, this particular company is actually a JV between L&T and CPPIB, and the gross proceeds of this particular sale to both L&T as well as CPPIB is a little over 2,700 crore rupees. Brokerages have reacted to this particular news. Jeffrey says that a little over 2,700 crores is the gross equity receipts, with L&T's 51% share actually indicating a little over 1,390 crore rupees. That comes to around rupees 10 per share. Now, what they're saying is that over the next 12 to 36 months, Nabha Power as well as the Hyderabad Metro divestment would be key triggers. Macquarie believes that the next focus, as far as L&T is concerned, would be support from the state government as far as Hyderabad Metro is concerned, as well as the real estate monetization plans that the company has indicated. So these would be the next triggers for L&T in order to improve its ROE significantly.
Okay, Vivek, thank you very much for that. Just a few seconds left before we get the opening rates in. It's going to be a very quiet start. The U.S. markets ended with cuts of close to about 1%, so the slide continued in the U.S. markets. But this morning, Asia is pretty mixed. Some green on the screen seen for Hang Seng and the Straits Times, but the other markets like Japanese, Taiwanese markets are in the red. 10 seconds left. It could be a lackluster opening. Things have turned quiet in terms of domestic as well as global cues. So there's not much to track, but watch for the IT names on the way down as Accenture's guidance and the commentary was a bit weak. That's the opening tick. The Nifty's opened at 18,280, just a gain, a slim gain of close to about 0.6%, a fractional gain coming through for the mid-cap index. The mid-cap index is just up 0.1%. The Nifty and the Sensex have given up those single-digit gains and now are flatlining. Just, switching between the red and the green line. The advanced decline ratio, at least in the first few minutes, has opened positive. 3 stocks in the green for 1 in the red. The big knock on expected lines has come in on the IT space. The Nifty IT index is down 0.7% with heavyweights like Infosys, Tech Mahindra, TCS, Wipro. If I look at the top 5 Nifty losers, 4 of them are in the IT pack. Sun Pharma is another stock which is under pressure, and that's because of the negative news flow surrounding Halol. So Sun Pharma is dragging the markets lower. It's currently down close to about 1%. L&T, there was news. The company had sold their IDPL, the road project, 51% stake in IDPL. They were going to net close to about 1,390 crore, but the stock has opened a bit subdued, down close to about 0.5%. On the gaining side, it's a mixed bag. So Power Grid is your top gainer. A couple of FMCG names like Nestle, ITC have green going for themselves. You can also see strength on Adani Ports. That's up close to about 0.6%. Coal India, Hindalco. These are a couple of the other movers, but very, very quiet, right? I don't know if this is a sign of things to come because year end is approaching, just last 2 weeks left, but absolutely flat, right? 3 points up, down on the mid-cap, and the Nifty as well, just down 3-4 points.
That's right, Riya, but there are some big winners actually from the broader markets. UTI, AMC, well, there are some unconfirmed reports that are suggesting that Tata is in the final talks to buy majority stake in UTI, AMC from PSU finance companies, and that's why that stock is up close to around 5%. Volumes as well have picked up out there, and we're just a minute or so into the trading session, so that one's up close to around 5%. The other one is KEC that won an order, that was just announced, close to 1,300 crores odd. So that one's opened up with a gain of around 1.5%. Yes Bank, they'll be selling the stress worth close to around 48,000 crores to JC Flowers ARC. So that's opened up with a gain of close to around 4%. Ashoka Bilcon, the subsidiaries will be selling stake in Jora Naigon Toll for around 690 crores. So that's opened with a gain of close to around 2%. Phoenix Mills, they've announced an acquisition of a 7-acre land parcel in Surat. So that one as well, let's see whether or not it's reacting. Stock is up close to around 2%. IGL, Sonal told us that they hiked CNG prices, in Delhi. So let's see whether or not we're getting some reaction. Are they 0.5% higher? JMM Pfaudler, promoter participating a little bit. They've got into a deal to buy close to around 1% of what Pfaudler has to sell. So that one, for the time being, still reading under pressure. It recovered a goodish bit from the low point of the day. And finally, specialty restaurants. Well, that one's on my radar because the board will be meeting in the next couple of days. That's on the 21st, and they'll be considering a fundraising plan. So that's interesting. For the time being, the street is quite excited about that. It's up close to around 3%. But as we pointed out earlier today, the Nifty has moved into the red. Chasing the gap up is not going to be helpful. Expect a volatile trading session. We're down close to around 55 points from the high point of the day. Prashant, what else?
I mean, quiet, absolutely quiet. Sugar as a theme is, picking up from Friday. Just these names. Bajaj Hindustan is up a full 10%. Ugar Sugar is up 4%. Dwarikesh is up 4%. Shakti Sugar is up 15%. There's, Pony Sugar, KCP, 10, 11, 12%. Balrampur is up 2.5%. Fertilizers is another one. This is what we were discussing with Prakash earlier. NFL, that's National Fertilizer, FACT. So when you have sugar and fertilizer names that we're talking about at 9:15 as the biggest gainers, that's maybe a sign of things to come. But in any case, volumes are also not that great. Although, I mean, for bulk of the names that I did mention, these are decent-sized volumes for this time in the day. Yes Bank, I think, saw a bit of a reversal on Friday. It had been doing very well. Yes is starting with decent volumes. Actually, it's a top volume-traded name. It's up 3% at this point in time. Indian Overseas Bank is another one of those unstoppable movers. Last many sessions, IOB is up another 3% right now. There is DBL, which is up, Dilip Bilcon, which is up 4%, 240 on decent volumes. Nigel already mentioned UTI AMC, which was up 4. It's up 7.5 now. So it's, if anything, adding on gains on that potential deal. So that's what we have. So this is the bulk of what's doing well. Let me just look at the downside as well and see if what's coming up. So UCO is down 2%. UCO was, along with IOB, one of those kind of unstoppable movers all of last week. That's coming off a little bit. Infosys is down about 1.25%, and that is the top volume traded cut that we have. Raymond is down about 1.7%. That's another one which is losing a little bit. Tata Chemicals is down about 1.25%. That's at about 980. There is Sun Pharma, which is starting lower. Ashok Leyland is starting 1.5 down. ONGC, I mean, it gave up all those gains on Friday. I think closed in the red. It's down another 1.5 to begin the day this morning. So that's broadly what we have. More stocks in a bit, but you got a 0.35 point change on the Nifty. So this is as flat as they come. Ajay Srivastava is our market master today, Chief Executive Officer at Dimensions Corporate Finance Services. Ajay, great to have you with us here. Thank you very much. You've been cautious, Ajay, for at least the last few interactions. You've been highlighting the virtues of investing in fixed income. I actually, on our show on Friday afternoon, put out a piece just looking at what various debt mutual funds are yielding. 7.5, almost 7.75% kind of returns. Of course, I mean, not post-tax, but what's your view, Ajay? What's your view on the markets from here out? And of course, what we are seeing on the rates side.
See, just to cover up what you said on fixed income, I think for most people who do on a salary side, the best thing is your PF. PF gives you the best returns compared to all the debt mutual funds. So I'm not suggesting debt mutual fund at all. I've been suggesting that you look at your PF, you look at your debentures that are available in the market, look at even government bonds. They give a better yield at this point in time. State government bonds, you can buy from the RBI window directly. You don't need a broker for that. So multiple options. Debt mutual fund, I would put the last or lazy options. Maybe a lazy investor, you go there. But the yields are available abundant. And as I said to most salary employees, your provident fund is the best thing. Increase it from your salary. You'll get the best return in your life over the next 10 years. Leave that aside. I think market is telling us, Prashant, one simple thing, that if all of us are still watching TV and working at this part of the year, we haven't done well, just as the market has not done well. So I think we need to focus, as to say, why by December 20th next year or 15th next year, we should not be looking at the screens and looking at the sea. And I think some of your anchors are at this point of time. So that's your target going to be. Number two is, if you got money, spend it on the holiday season. Just spend it, because no matter what you buy at this point of time, you will lose money in the end by the next quarter. So I would suggest to people is either stay away from buying, or if you really need to spend your money, do it the right way, spend it on holidays. Equity is not the place where you're going to be happy in the next year.
Ajay, view of the sea and spend it on holiday. I mean, you sound like a life coach, which is fair enough.
I'm following, Ajay, I'm following some part of that advice. The PF, I'm doing the optimum 2.5 lakhs at least is what I'm doing. As of now.
Perfect.
But so 2.5 is the maximum. I think
the
they
maximum.
capped it, right?
I mean, if the interest, or if you contribute more than 2.5, then you have to pay a tax on that.
Yeah.
Prashant, my pocket's not so deep, right? The kids are a little
no.
young
I mean, this
as
used to be
well, this used to be unlimited.
I mean, huge, right? I mean, but they capped it. I think 2 budgets back, 2 years back,
Yes.
they capped it. Ajay, the point is, if you're already doing, you said, I mean, lazy versus not, but this is already you're doing. One is doing, I'm assuming, right? I mean, why would you not put money into the PF?
Oh, Prashant, I'm telling you, we have known companies where most employees have an option to go for the PF or not, right? Right? That's a new law, right? And you'll find humongous number of people, youngsters particularly, who say, listen, this is not for me at the end of the day. I want money in the bank or I want to play in the market. So even very mature people, I see senior management people and middle management I come across in my various companies, the number of people not in the PF or not putting the maximum in the PF is just too high. It's unbelievable, actually. The irrationality of Indian investors is unbelievable as they stick around with low performing equity in the mutual fund, but refuse to put more. And as Nigel said, 2.5 lakhs is the contribution of the employer, but you can put much more money than that. I think you can put about 5 lakh plus in that and still be an interest-free zone. So total corpus that you can collect in a year, you actually, some of the people don't need to do anything at all. They just focus on this PF and that's the end of the story for them. So I think, it's just that the irrational exuberance on the equity markets has been so high in this country. And I'll give you an example. The fact that Indian investors still believe that Jet Airways can fly. Can you believe it? That tells you how irrational exuberance in the market. The only guy making money in Jet Airways transaction is the RP. If you watch where the whole thing ends, the RP would have taken and the biggest chunk of the money from the table. And the banks would left high and dry, employees will get high and dry, and the resolution professional will be laughing to the bank. And if that exuberance continues in the market, you can imagine what kind of stuff people do buy.
Ajay, in fact, we just briefly discussed this even on Friday, that the safe investments, the VPF, Voluntary Provident Fund, you can do up to 2.5 lakhs. You have PPF of around 1.5 lakhs. And if you have a daughter, then, you do Sukanya Samriddhi. And you have 6 lakhs odd safe investments, average of around 7.5% odd. But a lot of our viewers today, Ajay, will be watching in, whoever's not, enjoying a good vacation. They'll be wondering, what do we do on the equities front from here on? What's your sense? I mean, which are those sectors that are still offering value, if at all?
Value means what? Value means that were you able to sell it more than what you bought it at? To me, that is value for a stock. Rest is all immaterial. I may think the great company, but if the market doesn't think so, that value has no meaning. I would still believe, even as we sit in the current year, the only long-term investment I find in this world, and including India, is commodities companies. Because there are few, and who are there are monopolies. And if any economy has to grow, if this whole EV thing has to catch up, you will need aluminum, you will need copper. So the basic precept of any equity market is growth. Growth cannot come till we use basic commodities. And these commodity companies, globally, if you look at it, it's amazing, Nigel, that there are 6-7 companies who control literally the world market, including in India, just 2 or 3 companies control the commodities market. And I would still say that only one industry I would like to bet long-term and continue to invest is commodities, because everything else, if it has to happen, will start with commodities. Yes, sure, prices cycle will go up and down, LME will go up and down, but with high interest rate, you will not find new companies. You will not find new exploration bits. You will have to live with this kind of stock of mines for the next decade or so. So if you were to ask me in equities, only one long-term bet I can still go for, and I'll still keep investing, is the commodity companies, both India and abroad.
But Ajay, won't a recession in the Western world hurt commodities and the kind of demand?
Of course it will hurt, but if the recession in the West comes, the rest of the market will also go down along with it. So I'm saying, if you need to invest in this market, and I would sincerely believe the commodities is still the place to be, then commodities has to stay firm or go up. Because yes, recession will put it down, but also what it does, recession, is that it will take away new explorations, new sites, new mines will not be explored any longer. And you sit with this stock for a decade. It takes about 5 to 7 or 10 years for new mines to come into operation. Can you imagine this world that we are producing so many EVs? We want to have so many of the alternate power sources. They all need metal at the end of the day. You can't fight away. So recession be notwithstanding, if just the simple power sector transition has to take place from conventional power of coal to non-conventional power sources, which is solar and this thing, they need commodities like aluminum and copper. So recession or no recession, I think you are in for a beautiful ride on these companies. They are deleveraged, they're giving good dividends, they are monopolies, you need the product, no new supply coming in the market. I'm telling you, yes, gyrations will happen, but you can't get better setup for commodities than today.
IT, especially these large cap IT companies, right? If you are willing to tide right through the gyrations that we will see in IT companies over the next 6 months here, 6 months, 9 months, as bad news continues to come in from, the Western world. How is IT as a long-term, bet? If someone is willing to hold on for the next 5 years, is this an attractive time to start accumulating?
IT is a good for India. It's definitely good for India. The problem is that you have to be clear about what stock you're selling. In India, we basically believe the top two are the only ones to look at. The rest have been laggards. They do perform sporadically, but they're never given consistent returns. So if you're ready to be IT, is also you got to be stock specific where you want to be, and do you have the ability to keep buying to average it down? We don't know how US market is going, and let me tell you, if the Democrats continue to be in power, that US is going to be in a bigger grind. So I would say if you were to put in IT, hold this money for some time, keep watching the US market, and if you get a Democratic government again in next year and a half time, you need to exit your IT portfolio because that's disaster. This is what has happened post-Trump in the US. IT companies are now facing a bigger disaster. If next president also becomes Democrat, you run out of the US market if you have not already run out of it. So to me, IT is not about just the company fundamental. IT is about US political and US economy, because if that's not going to perform, your company is not going to perform. So if you want to invest in IT, I would say be slow, but just wait it out patiently till the next US election. That's a time to commit big money. Otherwise, you'll have these gyrations coming and you'll have a suboptimal performance. Your 20% fall just here. You may have another big fall next year as we go into the US elections for the president in a year and a half's time. So wait it out, keep your money parked. If the Republicans win, you go all in the US market. Not only IT companies, US market, go all in. If Democrats win, exit IT companies.
But that's true, right? Under Trump, Indian IT companies fared a lot better because of that Trump tax cut. So US corporations, Trump had brought down the taxation in US corporates, so they had a lot more money to spend, and a lot of it went to Indian IT companies. The budget spends went up, which flowed through Indian IT. So, we had done that analysis for, when the US elections were there, the prior one, Trump versus Biden. And at that time, it actually makes a difference, right? Indian IT does get impacted, as Ajay said, with what happens in terms of US politics.
But a lot of it, I would say, is also just cycles, right?
Of course it is, yeah.
I think Trump was elected in 2016, and then, out in right before, around COVID, and 2020, right? Elections were the last elections. 19 or 20, right? And of course, there was COVID then. So, and then you had the best ever times for IT services from the bottom of COVID, and now this. So, Ajay, just a quick point. IT, in a way, still remains a large sector which is down meaningfully. Because if you look at other parts of the market and even smaller parts of the market, right? Just look at what's happened to PSU banks lately. Look at what's happened with, money is rotated, squeezed out gains across a lot of these smaller sectors: fertilizer, paper, textile, sugar now, PSU banks. So is there a trade like that you see, a sector which comes back into fashion, long forgotten kind of sector where there is still money to be made? Yeah.
Ali, Prashant, what you raised is a very important issue for investors is the need to churn. And I think what you said, rotational sectors, typically Indian investor was told or believed the global concept was long-term is very good. But now you find PE investors who are supposed to be long-term investors are exiting investment they made in just 2 to 3 years. I think the point you raised is rotational of sector is important if you need to book your profits. Point to point, no sector has made money in this barring commodities if you look at it. And therefore, you need to keep churning out, that is one. But I believe in Indian market, you have another story, which is the restructuring stories of coming. Every day you find something happens. If you look at Yes Bank story, when the story broke about the deal with Carlyle, etc., the share price was about 13, 14 rupees. You had enough time to get in the share, hoping that the RBI will approve it, which it should have approved because that's a government stuck there. So it is a no-brainer. And you see the stock today at 22. So I think for investment, more than just chasing sectors, I think we can have very good stories which we have given good returns and they give you a chance to enter. So look at Yes Bank, look at Ambuja Cement, what happened. Look at Eureka 4, what happened. Look at just now the restructuring story unfolding in Aditya Birla Capital. You saw the re-rating happening. You saw GHCL. So I would certainly suggest that more than just sectors, because sectors needs a lot of knowledge and it needs to be spot on in entry and exit. Like in sugar, if you had gone into on the hoopla of last year of ethanol, 20% government and sugar was high and export was going on, you would have lost 30% of your corpus by now. And now the sugar is climbing again. You would have made no money. You would have lost money in the best sector of the last 12 months. So if you want to rotate, the rotation is important, is how you get in and how you get out is more important. I would say go for safer stories where there is established restructuring happening in the company, whether it is ITC, whether it is L&T, now it's Yes Bank. Ambuja, the day the deal got announced, Mr. Adani was buying at 382. Ambuja was available at 378. You could have gotten the same price. Today it's at 540. So even in a worse market like what we are today, a steady, stagnant market, you can make very handsome returns if you chase ideas which are under restructuring, acquisitions, new investments coming in, and they would give you very good returns. So I would say forget these sectors, look at the big ticket money flowing, where it is going, and follow the big ticket money. Sometimes you may go wrong, but 9 times out of 10, you will make good money on a very safe platform.
Okay, Ajay, we'll leave it at that. Thank you very much for joining in. Let's move on and talk about the insurance sector. Now, the Finance Ministry or the IRDA has proposed a composite insurance scheme, which means a life insurance company can now also distribute general insurance products and vice versa. They had sought comments from the industry bodies by 15th of December. To discuss the way forward for the insurance sector and Outlook 2023, we will be now joined by the CFO of HDFC Life, Mr. Neeraj Shah. Mr. Shah, morning, and thank you very much for joining in. First, if you could tell us, were there any comments which were given by HDFC Life on this composite scheme and the other amendments proposed by the IRDAI? And if yes, could you elaborate on it?
Morning, Yuma. Thank you for having me on the show. Yes, in fact, IRDA, under the leadership of the new chairman, had constituted multiple committees. We were leading one of those committees on development and penetration. And one of the recommendations was to broad-base our ability to offer more solutions to customers. This was one of the moves in that direction in terms of allowing us to distribute products of other financial services companies, as well as in terms of increasing the mandate from offering life to life and health as well, like the way it used to be a few years back.
Hi, Neeraj. So will you start distributing the general insurance companies or, products, or will you apply for a new license? That's the general insurance license.
Yeah, so we need to still think that through in terms of how we want to really do this. There are going to be a few discussions here within the group, like it would be in all other groups as well, given the coexistence of both entities. We are very clear in terms of at least, broad-basing our solutions. Currently, we offer it in combination with our health insurance sister company. And we will just think through in terms of how we want to, once this is available, we'll just think through in terms of how we want to make the offering to the customer.
Neeraj, but you'll at least have a sense on which side you're leaning, right? I mean, you have a couple of options out there. And by when will you decide?
So it'll probably take maybe another few months, really. There are a lot of considerations on the table here in terms of distribution versus manufacturing, and in terms of at what scale do we want to operate, how are our customers seeing this, how is our distribution looking at it. So the multiple factors to be considered, but yeah, we should have a view in the next maybe a few months.
Neeraj, hi, good morning. Prashant here. Could you walk us through briefly what are the considerations, as you said, with some detail? Yeah.
Prashant, if you look at it globally, there are multiple business models that are available. So you have monoline companies, then you have companies which have joint licenses as well. In different parts of the world, there have been different models that are existing, and things will develop in line with how the market is shaping. India is a very underpenetrated market compared to some of the geographies that we're talking about. So there'll be multiple things at play here. Health, yes, I mean, depending on the kind of business, it could be either seen as a long-term business like life, or it could be seen as a one-year renewal business like the way most of the business is being conducted today. So these are some of the things to be looked at. The capital requirements of the businesses would be different. So for composite licenses, a lot of those things would come into play in terms of what's the kind of overall picture, because these end up being different businesses with different kind of economics. So these are some of the things to be looked at apart from the group structure, Nishant.
From a group structure, you also have HDFC Ergo, right? Which distributes general insurance. So does it make sense to merge the two entities and now provide a composite scheme? And walk us through the pros and cons of this approach.
So, we discussed this last time as well. So not really, wanting to talk about specifics here right now, given that we are still very early stages of, this development. And like I had mentioned last time as well, I think both the companies are at scale. We are working together, and we'll have to think through how we want to really do this going forward. As far as we're concerned at HDFC Life, clearly we want to expand our product suite from Life to Life Plus Health. That is something that we are working on at this point in time.
All right, let's talk about other parts of the business then, Neeraj. Could you tell us what is the APE growth you're targeting for this year? That's for FY23, if you could just revise that number for us. And also, what will be the VNB margins that you're looking at?
Yeah, sure. So if you were to look at the numbers, Y to date, we are growing at, on a 2-year basis, we're growing at a CAGR of about 15%. On the year to date basis, we are at about 11 to 12%. We are targeting to grow this year based on how we see things, and at the way we initially drew up a plan at about 15%. We expect the industry to grow around that time. Within the industry, there are various dynamics, as we're aware. We have listed companies. We're growing in, for Q2, we grew the fastest among the listed companies. YTD November, our growth is largely in line with the listed companies. The sector overall, ITD has grown at about 18 to 20%. We've grown at 15%. On the VNB margins, we've reached last year's levels. We are currently at 26.2% for the half year ended September. And last year, we closed the year at a little over 27%. We expect to close the year at very similar to where we did last year, given our merger with Exide Life and the margin profiles being different. We had mentioned that we would basically continue on a margin expansion journey after absorbing Exide Life over a span of about 12 odd months.
Neeraj, in terms of just new policies overall, right? I mean, it's been sluggish for the industry overall. You had a couple of tough years because of COVID, losses. Then I think reinsurance rates have gone up because of that. And I don't think one should expect them to come off or expect any help from there. Is 2023 going to look better? Or is it going to be just a year of sort of consolidation?
So, Prashant, we put in all the factors that are at play indeed. And if you were to break up the business into 3 segments that we operate in, one is long-term savings, second is on the retirement side, and third is on protection. These 3 businesses have actually, behaved differently in this period. You rightly mentioned about COVID. There was a point in time, just pre-pandemic, where the protection business was going at a certain scale in terms of how customers were thinking about it. That kind of shot up very, very steeply over the first couple of quarters of the pandemic, given the fear factor. And then it has normalized once again. So the large part of the degrowth that you see on number of policies on account of the protection business, which has normalized to 2 years back. And given the kind of strength that we're seeing on the long-term savings business, which has grown extremely well over this period, the annuities business, which has grown very well, you've seen a significant amount of increase in the ticket size. And clearly for the industry, like you rightly mentioned, there is work to be done in terms of reaching out to more customers. It's indeed an effort that we are making at HDFC Life, and I guess we need to do so at an industry level as well. As far as the overall dynamics are concerned, things are definitely normalizing now. There was a time earlier on in the pandemic where the conversations with folks, that's reinsurers who share risk with us and help us on that front. There was a very different thought process at that point in time. Things are now slowly getting back to where they were pre-pandemic, while the full reinsurance capacity hasn't returned in terms of number of players. But definitely the 2 large active players are looking to get back to business very soon. So we have this year would be a combination of consolidation as well as continued growth. We would expect the sector to grow at anywhere between 15 to 20% this year. So that would, I think, be a fairly healthy performance along with margin expansion at an overall level.
Neeraj, we'll leave it at that. Thank you very much for joining in. That's HDFC Live for you. Need to slip into a very short break. On the other side, we'll be joined by Anuj Khanna Soham of Affle India, as the company's board last week approved raising of funds via a pref issue. More details on their fundraising plans on the other side. We'll also connect with Kulin Lalbhai, the Executive Director at Arvind Fashions, to discuss the demand business outlook 2023. Stay tuned.